We have some serious stock prices to talk about in this video. Now keep in mind, it is about 1:38 in the morning, and I've definitely had at least one drink. So in this video, take that with a grain of salt for whatever that means. Tesla is now releasing 12.3-5 in addition to reducing prices on essentially the Model Y, S, and X by $2,000, which is interesting because we just pulled forward pricing for April 1st with a $1,000 price increase, and now we're decreasing prices by $2,000. That is a margin hit. Obviously, we already know that. We already know that demand is hurt by high interest rates for Tesla. Does this mean that Tesla is a bad company? No. Is it a problem that Tesla is fixing the 3,800 vehicles they recalled with one rivet to an off-center position of the brake pedal that they placed or installed using dish soap or some form of soap? No, those things aren't necessarily problems, though they do sound a lot Boeing-like. It is worth, though, noting that when something sounds a lot like Boeing, always remember that when one door closes, another blows open. So, in this video, we've got to understand, what's the future going to hold for us? Because, frankly, a lot of people are concerned about Tesla. A lot of people are concerned about AI stocks. And a lot of people are wondering about financial stocks. Is now the time to flee to financials? Well, in my opinion, the opportunity to flee to financials is, quite frankly, straight clickbait. In fact, I tweeted this, although these sort of bearish headlines don't tend to get a lot of attention, so I'll mention it here. I am shocked, I said, that financials, aka banks, are the ones that held green today. JP Morgan, Citi, Wells, Bank of America all saw charge-offs up by 70 to 105%, yet they were the ones that ended up covering that hit with fewer allowances. In other words, the cracks of the banking crisis are in plain sight. Yet what is happening? Banks are willing and able to take on more leverage and continue to keep the Ponzi going. It's not just the banks, though. It is worth noting what the Federal Reserve just told us. The Federal Reserve just today released some new data, and I know about this data because I made sure to send it to myself. The Federal Reserve's Financial Stability Report reported that leverage at hedge funds have reached, or leverage at hedge funds has reached, the highest level since the beginning of data collection for this report. Yikes. That's not good. But it's not just that, folks. It's not just the leverage that we're seeing at financial firms. It's also the fact that it is likely that even though we might have $5 trillion of assets on the sidelines, it takes much more than fear to get assets to move from the sidelines into stocks. So if you're betting that money markets are going to bail out your stocks that you chose, good luck. That is highly unlikely. Money markets will bask in their 5.5% until they can't bask in their 5.5% anymore. And the frank reality is they'll probably be able to bask in 5.5% for quite a foreseeable future. Therefore, in order for earnings to actually meaningfully exceed the rates of returns of money market funds, we will need earnings, wait for it, growth. We've talked about this for weeks before, and the reality is, yes, there is a coupon code expiring today on the programs on Building Your Wealth. Not only is there a coupon code expiring, but one of our course members, Ohad or Omad, one of these things, ended up sending us a profit that he just made on one of the buy-sell alerts that we sent, and I have to say, I'm really proud because they were able to 3x their money. They spent a little over $2,000 investing in this particular option. And folks, you won't believe it, but this is a real option from Ohad Pearl. Thank you so much for sending this over to us. Look at that. Invested $2,500 on one of our buy-sell alerts, up to a total of $8,110, over 322%. Congratulations, OHUD. We appreciate you being a course member. And if you are not a course member yet, remember, we have a coupon code expiring tonight. Given that I'm filming this video at like 1:44 a.m., that's literally what this says right here. I probably won't actually be changing the pricing until the morning. But the good news is you'll get this picture of Summer instead. And she's cute, she's adorable, and quite frankly, we cannot wait. Let's see if I can reactivate that. There we go. We cannot wait for her to come home because we love her, we love Summer, and we want our entire family of 7 children to be home. But are the banks running a sign that the banks are going to win during this period of uncertainty? When Iraq gets struck, a mobilization force gets struck by non-American forces and somehow gets airstruck, and you've got individuals wounded showing up at the hospital, which leaves Bitcoin during the halving to move down $1,500 only to rebound. Is this a sign that we need to be careful with what's going on in the world and our investments, or is this a sign that we're just due for some volatility? Well, here's the reality. A lot of people asked this in comments in the last video I made, and I'd like to be exceptionally clear here. This is when you need to rebuy. I'm going to be very clear here. First, you're going to buy the Stocks and Psychology of Money course, link down below at mekevin.com. Then you're going to go to metkevin.com/roadshow, and you're going to RSVP for one of the dates and times that we have so you can meet us on the Househack Roadshow. I think you could also go to househack.com/RSVP. Yeah, wow, look at that, it works. househack.com/RSVP. And you'll be able to go in here and select a location and time that you can actually meet us, present what the heck we're doing with our real estate startup to diversify from stocks. Because I'll tell you, if there's any time to diversify from stocks, it's now. One drink, multiple drinks, or not. The time to diversify is now. But look, let's be real. What is it going to take for the stock market to go up again? If you are invested in stocks and you are betting on stocks going up, what is it going to take for stocks to go up again? Folks, it is very crystal clear, simple. We are going to need positive earnings growth. It's not what we're seeing at companies like Tesla right now. I hate to say it. But at Tesla right now, we are trying to pass a board vote, a shareholder vote to reapprove the 2018 package. I think it's going to fail. I am not here to tell you that I think it should fail. I think people deserve to be paid what they deserve to be paid when they made an agreement with shareholders. However, I don't think with the latest share price performance that the majority of shareholders are going to approve Elon Musk's share package compensation. Instead, they will say, Elon, come up with a new compensation package. Focus your energies on Tesla and show us how you can 2 to 3x Tesla, and then we will handsomely reward you. That is what shareholders want. And I don't think people realize that there's the argument of the bulls, the argument of the bears, there's the judge's opinion, and somewhere between that whole mess, there's the truth. But the reality is Tesla will probably fail the vote on Elon Musk. I am not advocating for either side. I am simply saying it will probably fail. And when it frankly probably fails, look out below. It's going to be a hard time going forward. At least the next 3 to 9 months. I hate to say it. The same will be true for ASML, AMD, for ARM, for Apple, for Tesla. Everybody's going to go through the correction period of flatness. Do I or must I remind you of what von Mises told us? I think people clearly forget about this, especially when we talk about Tesla gluing stuff back together with dish soap. Von Mises tells us the quantity of money in circulation. When it rises for an unknown reason, people feel richer, maybe like stimulus. But this extra spending merely moves up prices, leaving nobody better off. So prices went up, and guess what? Nobody got any benefit out of it. What a surprise. Such is the story of inflation, but there could be something worse. We could have been leading entrepreneurs to believe that there is a real increase in the demand for their product. Meanwhile, a surge of credit or for credit has increased public's spending. Here it is. It's on ehack.com. April 2nd, April 3rd, we covered this. We've been screaming for a long time, increase cash positions. I think there is still time to increase cash positions. This is not personalized financial advice for you. It is simply to say that Von Mises is predicting a large crash. And if you are not prepared, if you're not part of the Stocks and Psychology of Money group where we talk about this daily in the course member live streams, or you are not in another way preparing yourself, you are going to make a mistake. If you need a bundle code, email us at staff@meetkevin.com. The sooner you do it before we wake up, the sooner we can get you taken care of. So, I want to be clear. I appreciate you all. I am long run bullish on Tesla. Version 12.3.4 is amazing. And version 5 is coming out. It's going to be great as well. Are we ready for robotaxis? Not yet. That's 5 to 10 years out. Can't price that in. But should we bring back the Model 2 and some kind of hopium compensation plan rather than a retroactive compensation plan? Probably. Those are my takes. Thanks for watching. We'll see you in the next one. Good luck and goodbye.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than househack, nor am I presently acting as a market maker. Make sure if you're considering investing in househack to always read the PPM at househack.com.